Now, the S&P 500 has an average yearly return of around 10%. However, in 2021, 2020, and 2019, it beat those numbers significantly with a 28% gain, 18%, and a 31% gain. Now, we compare where the market is now to 2008 a lot. And in 2008, you had the average return for that year a decrease of 37%, with the SPY sitting down 16% and the year about to end. The question that I have for you guys is, hypothetically, if you had $20,000 to put into the S&P 500, would you sit on your hands or would you invest it as soon as possible? What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Today we have a really good question for you. And the question comes from me selling my stocks tomorrow. So unless you persuade me, based off of everything I'm going to bring you today are the reasons why I am selling my long-term portfolio and planning on sitting on my hands to buy back in at a lower price within the next few months or so. Notice how I said long-term portfolio. No, I am not selling my AMC. I'm not selling my GameStop, but we do have a lot to talk about. So please, without further ado, just hit that subscribe button. Thank you guys so much for 8,000 subscribers. We just hit that yesterday and it literally means the world to me. Let's get into the video. So as we all know, the Fed raises interest rates by half a point to highest level in 15 years, taking it to a targeted range between 4.25% and 4.5%. Along with the increase came an indication that officials expect to keep rates higher through next year with no reductions until 2024. Now, despite how bad 2022 has been, it all comes down to the Fed raising interest rates that affects the chain down the line and kind of causes a domino effect of money to stop flowing into the market. It is not going to stop for another year at least. Now, one of the largest hedge funds, BlackRock, says to get ready for a recession unlike any other, and what worked in the past will not work now. They go on to state that the global economy has entered a period of elevated volatility and previous investing approaches will not work anymore. A recession is imminent, but central banks won't be able to support markets this time by loosening policy. Recession is foretold as central banks race to try to tame inflation. It is the opposite of past recession. And finally, the man, the myth, the legend, Michael Burry, aka The Big Short, aka the guy who predicted the US housing market crash in 2008, also expects a multi-year recession going forward. Not only that, but hedge funds have performed the worst they ever have this year. And finally, the United States is developing a bank-to-bank digital currency, CBDC. Now, I pulled a few things out of this that I kind of just wanted to touch on, and these are legitimate responses straight from the article. So the goal of the network is to reduce settlement risk in cross-border, cross-currency transactions. United States are focused on wholesale, while others, such as the Eurozone, are hard at work on a retail digital currency that could be used to buy an espresso. But over a span of 2 years, the world's leading central banks have gone from skeptical to serious about a government form of digital currency. Atlantic Council's Geoeconomic Center began this project in 2020. And as the global economy likely heads into a recession in 2023, the need to improve delivery of money to citizens is paramount for policymakers. Central bankers are concerned about losing monetary sovereignty and become blind to what is happening inside their own economies. More testing will be done over the next 6 months, and it will likely be a year before any real money is settled on a US central bank digital currency network. Notice how it's been worked on since 2020 over the span of these 2 years. Do you guys think this is correlated to what happened with AMC and GameStop? And I know some of you that might sound like a fishy question, but some of the largest players, Citadel, BlackRock, Goldman Sachs, Credit Suisse, all of these central banks got trapped in a play that if it happened the way it should have happened, would have bankrupted every single one of these funds and stopped this old money from being recycled to the people. So down below, do you guys think this being created had something to do with AMC? Now, what they say the reason is that they created this is because of certain sanctions, but let's just move on. Credit Suisse is projecting a 1.6 billion fourth quarter loss, and Swiss National Bank lost nearly 143 billion in the first 9 months. And central banks have been loading up on gold. You can take a look at the chart right here as the US currency falls as a whole. Not only that, but after the FTX collapse, if Binance collapses as well, this is going to be horrible for crypto, institutions, and the overall market. This could take an even bigger hit than what the FTX collapse caused. And Binance has been seeing tons of outflows and breaking trust connections. And if you don't trust a platform or you don't trust a currency, there's absolutely no reason to hold it. So there is a potential that this could lead to bankruptcy and people will be pulling out and just cause a bigger domino effect and issue that we saw with FTX. Touching on the S&P 500, the chart doesn't look good as is, but when you bring the drawings in, this is the same layout that you saw back in 2008, which would show that we are about to get the sell-off of our lives. Not only that, but in 2008, based off of the fib retracement, it got saved at the gray zone, the 227.23, which would bring the S&P 500 all the way down to around $228 to bottom out. I think with a year left of uncertainty, the huge shift central banks are making, the huge shift that retail is trying to create in market structure, all coming together, I just don't see the S&P 500 kind of coming up where it has to be. And with the Fed having to raise interest rates, they can't pump it up. And with big institutions being trapped, they can't pump it up. You can see crypto dumping, selling off. These are big institutions. This is where they stash their liquidity stash spot, right? It's not there. They can't make these contracts because of phase 6. They have to pay extra. These collateral requirements are going up. There's just way too much intensity in the air. I'm going to ask the question again before we get into another stock that I wanted to touch on to close out the video. If you guys had 20K right now, would you invest tomorrow or would you sit on your hands? Now guys, before we get into this stock that you really should pay attention to come tomorrow market open, I wanted to just let you know real quick about the sponsor. It'll take 10 seconds. Sponsor of today's video is Moomoo. If you use my link pinned in the top of comments or in the description to download Moomoo on your phone or computer, open an account and deposit even $1, you're going to get up to 20 free stocks, which if you do sell, you're going to come out well over $1, plus a chance to win $60,000 and a free wheel spin on another special stock. Moomoo offers a super dope custom earnings calendar that no other platform offers, free level 2 order book data so you can see where whales are loading up and dropping off, access to viewing other exchanges so you can see how your exchange will open, access to trading crypto, further expirations for options, access to trading options, access to going long and going short, and your money is FDIC insured. So guys, use my link, open an account, and deposit $1 to get these benefits. Now we posted a video on COSM stock forcing naked short positions to technically cover on their stock. They did a reverse split with a QSIP number change. However, they also changed the name of the company. All of this at once legitimately forced naked shorts to cover, at least from what we know. Now, another company potentially doing the same thing is ticker symbol CEI, Camber Energy. 1-for-50 reverse stock split is about to occur on CEI effective December 21st. Now, there is nowhere that says there's going to be a QSIP number change and a ticker change, but it could just come out of the blue and they could hit short sellers like that. Now, remember, if you're taking a look and you're saying lottery stocks, there's only a 5% short interest on this play. Well, when COSM short interest was reported, it was way off. It was around 20% when it was actually around 2,000%. And same thing with GameStop back in January when they reported around 20% and it was actually over 150%. Not only that, but taking a look at CEI's chart, you can see that it is maliciously shorted by short sellers. Take a look at the volume and the price decrease. The stock just looks like any other low float stock going through cycles and being pushed into the floor by short sellers. So again, guys, I'm going to keep this on my radar. I may take a small position, but hopefully you take value out of the video or enjoyed watching. Please hit that subscribe button, share this to somebody. I love you all. Lottery Stocks out.